Hello, everyone. This is Ryan Mallory for SharePlanner.com. Today is October 22nd, 2015. Doing another hangout with you guys. Enjoying some market strength today. Watching the stocks rally in general. Now we've seen in the past hour the market's pulled back a little bit, but nonetheless, I mean the rally looks pretty strong today. We'll see if, as we head into the final hour here, if stocks can curb some of the selling that we've been seeing over the past hour. So anyways, I want to use this video today to talk about something that's very important, and I would probably say is something that we're all susceptible to, and that is fighting traders' remorse. We get out of a stock, we use the best information that we have to make a decision, we act on that information, we sell a stock, we get out of it, we feel a sigh of relief because we've booked some gains or we've minimized some losses, and that's a little bit of stress off of us. But then we wake up the next morning and we see that the futures are up and the market opens and that stock goes up like 3 or 4%. And you're thinking to yourself, man, why did I sell that thing? Why? And it'll eat at you the entire day, because it's very upsetting when you get out of a stock and then you see the stock rally thereafter. I know it's upsetting for me at times, and I've had to learn to fight that over the years. Here's the thing. When you get in or get out of a stock, the stock does not care what your position is in that stock. When you get out of it, the stock the stock market isn't notified that you're getting out, and that all of a sudden it needs to validate your decision to get out of that stock by tanking hard that particular stock. It doesn't. The stock's going to go up or down regardless if you're in it or out. That's just the nature. There's two directions that the market can take: up, down. So when you get out, it's going to do one of those two things, and it may keep going up. All right. But the thing is when we struggle with that, kind of trader's remorse, it's because that we're more focused on the profit aspect of trading than the aspect of risk. And when you manage risk, it doesn't mean that you're going to maximize your profits on every trade. Far from it. In fact, when you seek to minimize risk and manage it appropriately, it often means that you're not going to be maximizing your profit, because if you have to choose between massive risk or the opportunity for massive profits, you've got to choose the need to manage risk. Okay, you can't push risk aside for the opportunity to make some big profits. People do that; they do it every day, and they blow up accounts as a result of it. So let me give you two very good examples, okay? Obviously, we already said that the market's rallying today, and there's definitely a lot of strength in this market today. But yesterday at the close, I got out of Marriott, okay? Now you look at that stock, and it's up about 3.25%. It's been over 4% as well today. Now you see the market go up, and I've got 6 other positions right now that I'm managing, but this one here will irritate you because it's up. At one point it was up over 4%. You're thinking, man, I got out of this stock for a 0.6% loss yesterday, and here it is. It's up 4%. I'd be up 3.3% overall, and I wouldn't have any problems on this trade. I would look like I knew what I was doing. So that's the thing that I guess, if I was to say, that's the natural inclination for people to want to think. Okay, they want to get hung up on the fact that they're out of the trade and the stock's rallying without them. Well, guess what? The stock can always rally without you. It doesn't need your permission to do it. It doesn't need you to be in the stock in order to do it. So why did I get out of the stock yesterday? Because when you take a look at this trade, okay, and let me just try to make the chart work. Okay, this is all I could see. All right, this, to me, when I got into this stock, it was back off of this day right here on 10/15. when the stock was showing a strong sign of bouncing. Okay. Oh, I'm sorry, not on this day. It was actually right here on 1019. I was trying to play this bounce. We had seen it bounce before. Okay. But fast forward 2 days more. Okay. We get a good bounce yesterday, but now the bounce looks like it's starting to fail. The market yesterday looks like it might be trying to roll over a little bit. Don't know that for sure. I definitely hold out at the possibility that it could rally like it's doing today. But at the time, okay, we're sitting on this 10-day moving average. That's been support here. So yeah, let's not fire sale our positions, but let's curb some risk here where the trades that we're managing looks like they might be failing a little bit. So Marriott, I get out of Marriott, take the small loss. That's fine. Okay. And but then you wake up today and you're looking at the market and boom, it's rallying higher. And it creates a huge conflict within the trader, of next time I'm just, I'm just going to let it ride next time. I'm not going to sell it right away. And then that's where you start getting into trouble, when you start modifying how you manage risk simply because you've had an experience where the stock rallies. Because guess what? Every one of these that I can point out, I can also show you, 15 to 20 trades for every one of those, to where if I didn't get out, I would have had a lot more losses as a result. So managing the loss, it's imperative. And yes, you're going to have stocks that rally without you. And yes, Marriott, maybe it goes up to $80, $85 before it finally cools down. I don't know. But my first responsibility as a trader is to manage the risk. It also happened with MasterCard yesterday. Not to the same extent, but it's up about 1.6%. This candle here, and I'm going to do the same thing that I did with Marriott. This is what I was looking at the end of the day. When I came into the trading session, I said to myself, I probably don't want to be holding this stock if it closes below the 10-day moving average. It closed a penny below the 10-day moving average. So am I going to be disciplined and go ahead and sell the stock? Yes, I'm going to. It was not behaving correctly either. So I get out of MasterCard as well. And so that's a huge bearish engulfing candle pattern that we got out of MasterCard yesterday. Basically, in one fell swoop, with 1 day's worth of price action, it eliminated 3 semi-positive days in the stock market for it. So what's the odds of this happening the next day when you have a market that, ignoring today's action, had one of these little numbers? You've got to curb risk, okay? You can't go into the next day going guns blazing. You got to show a little bit of respect for the market. That's what I'm trying to do. Today, though, I mean, I took a loss yesterday in the portfolio. Today, I'm doing far better than the loss that I took. So I was able to get into 2 more additional trades. We've got some really good, I got some good trades at work right now, namely Disney. I mean, this thing has just been a superstar. I got into Disney back on the 9th of this month at 105.88. Now we're trading at 113. I mean, this is a big runner here today. So, and a almost 3% move in this kind of a stock, that's a big move as well. So you can see, though, it has this perfect support underneath with the 5-day moving average. I'm not really inclined to sell this stock unless it can break below that 5-day moving average. And then there's some other names that we got in the portfolio. So this is a good example, though. Disney. I did not sell Disney yesterday simply because that, okay, the market was selling off some, but Disney wasn't giving me a reason to sell. Disney wasn't giving me a sell signal. It wasn't breaking down technically. It remained strong. Same thing with Facebook. Yeah, I would like to see Facebook a little bit more aggressive here, pushing that $100 mark today. But nonetheless, though, I mean, this chart, it's still very bullish. It's still very strong. It's breaking out above this resistance level here from last week. It's trying to break above the highs from July. If it does that's a good sign as well. So there's a lot of good things going on here with Facebook too. And then you got TYC, and it's pulled back a little bit on the day, but overall, I mean, this is a stellar breakout. It's in full swing here. I'm going to continue to try to ride this one higher and see how much of a move we can get out of this trade. So, you know, that's my trading in a nutshell. The risk is absolutely imperative to manage. I wouldn't be where I'm at today in my trading if I didn't put risk at such a premium. If I didn't sell the Marriotts out of the desire to manage the risk and not the desire for massive profits, okay? And I know that sounds counterintuitive because everybody, you know, when they think about stocks, they think, oh man, you reel in cash by the wheelbarrow, and that's not true. It is all about the risk. If you manage the risk, the profits will come. That's why I don't focus on the profits that much. That's why I don't really put a huge emphasis on target prices and all that stuff, because it's all profit mentality. And you got to get out of that profit mentality and be thinking about risk. I mean, you think about the banks. What are they obsessed with? Price targets, upgrades, downgrades, whatever. But they're always talking about price targets. Oh, we're low in our price targets. But they never talk about the underside of the price action. They never talk about the risk. I mean, that would be great to me if a company came out or a bank came out and they were actually more focused on the risk aspect of a stock than the price target of the stock. But you'll never see that. So that's going to do it for now. If you guys have any questions about the Share Planner Splash Zone, feel free to try it out for 7 days. You can go to shareplanner.com/splash zone and see for yourself what the Splash Zone is all about. If you have any questions about how the service works, feel free to email me as well, Ryan@shareplanner.com. And it's a great community, great chat room filled with lots of traders and great ideas and lots of experience levels. So come try it out, and hope to see you in there. Take care and God bless.